Hey, hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to start out with the economic data, see how that impacts the overall markets with a little market analysis, sprinkle in a little geopolitical fodder to round off that analysis, and then finally talk about some option strategies we could implement into a portfolio based on these assumptions we're coming up with in this analysis. All right, so without further ado, let's get on with the markets. I wanted to get in here a little bit earlier today because why? The only economic data we have this week that could move the markets is coming out here in just a few moments. It's this consumer price index. We're going to see how inflation is working through the system here in the United States. A couple of things to talk about. We got crude oil up here right now, moving higher. I was expecting us to rebound away from the 120 mark, but we bounced above that and are now finding that as a support, or yes, as a support. So while we find support and resistances, as it acts as a resistance, it will then act as a support once you've cleared that hurdle, if you will. So we're seeing that happen right here in the markets and crude oil, sustaining that 120 barrel mark. Now, I don't expect to see crude oil come off at all. Why? Well, we might see a lack of demand here, but the national average right now is $5 a gallon, $4.99. Okay, so that is just below $5 by a penny, but still record-breaking highs here in gas prices on a national average. How is that going to affect you and I? Well, it's going to keep us from spending money elsewhere. If you think about it, I'm not going to spend money at Starbucks. I'm not going to spend money on a dessert at a restaurant. So when people are looking for investments right now, it's very difficult because with a consumer that's very concerned about the money that they're spending, this is going to impact everything else in society. We have higher prices for mortgages. Folks are going to have to pay more for that, especially because we probably still have I haven't done the math on this, but there's still a lot of folks out there that are on shorter term arms where they can adjust based on how the it's based on basically prime rate, which is what the Fed is adjusting. So everything on top of that, if the Fed raises 50 basis points, that means 50 basis points is going to be added into somebody's mortgages on these adjustable rate mortgages. That is going to be a very painful situation for most folks. And then add on top of it higher gas prices. And these gas prices are not going to come off, folks, unless we hear some massive change in the paradigm, what this administration has been pushing forward. They're not going to release any permits. Nobody's going to build another refinery. As a matter of fact, we're talking about refineries here in the United States and how we haven't built any. I actually know of one that's not even, there's a refinery here in the United States that's not operational. I can think of one in particular, hasn't been operational for probably over 25 years. Now, I bet that person can't really just kick up operations to start refining here. As a matter of fact, it's in Fort Wayne, Indiana. And I doubt that they can really just start right back up without going through a lot of EPA or other environmental agencies to really be able to do that. Because now with urban sprawl, this refinery is actually within the city, if you will, whereas on the back in the day, it was on the outskirts of the city. So those are dynamics that we're all going to have to deal with. If these refineries shut down like 20 years ago, we haven't built any new refineries. We aren't going to build any new refineries, but can we get the old ones up and operating? I don't know. That's a question I'd have to ask the EPA or some folks in those local communities, even if they want that. But without producing any more oil here in the United States, the refineries, all of that stuff are definite headwinds that we're seeing here in the United States. So higher prices are expected to continue here. Well, I'm looking for the CPI numbers, and for some reason my chart's not popping them up. There we go. CPI, as expected, comes out higher than expected. We come in at 1%, expected to be 0.7 there. And then if you strip out some of the more volatile aspects of that number, which is usually food and energy there, we're stripping that out, and the number comes in right at 0.6, slightly higher than the expected 0.5. So continuing to see inflation ramp up here in the United States, and that is going to cause a lot of pain on top of the rest of the aspects we're looking at. So let's get on with the markets here. seeing inflation, not really surprising here, but that's going to cause a little bit of downward pressure here in equities, I would expect. Surprising to see, though, that gold is selling off ahead of that number and continuing after that number. I thought we'd get a little bit of support here based on a higher inflationary number that would draw folks to something like gold, which is usually a retainer of value there. Moving on to the VIX here, we got VIX moving higher. Why? Because I'm sure this equities are going to start rolling over here. Creating that other shoulder is what we would like to see here. Now, if we start breaking down too far, that other shoulder is going to be kind of broken there. So this is exactly what we were looking for. I expected this pullback a little bit earlier than what we're getting right now to build out this shoulder bit. If you guys remember, we were talking about there's the left shoulder building the head and now building out the right shoulder. If we go down here, we can go down as far as about 11,500 to create that other shoulder, much more than that. And that pattern is done. And we are back into a bearish move here. But I think we're going to kind of work through this here. Coming into today, I was expecting maybe to see a little bit of weakness, but with this economic data point heading into a Friday, I don't think we're going to get that late day rally unless it happens, folks. Unless it happens in the last hour of the day today, that could be where we see this buying pressure. Why do I say that? Well, it's summertime markets, and we used to say it's a rush to Hamptons on Fridays after basically noon Eastern time. So that's when we start to see the volume start to drop. Now, if we see more of the retail investor coming in looking for value, that's where I think that we could see some support here. But I don't think that that is going to be a support level that you would want to really hang your hat on, because the institutional money is going to be very light during that time. This week, we talked about it, not a whole lot of economic data. What's going to be driving these markets? It's really going to be whatever we're hearing coming out of the talking heads from the U.S. government for the most part. We're not hearing anything that is making us feel any more comfortable. So therefore, I would say risk definitely to the downside. We're even seeing these oil companies, the banks that I've talked about. That's where you're going to see some upside potential there. Those guys are starting to show some weakness. Even the oil companies, based on a higher price here, starting to show some weakness. I think that that is indicative of a bit of a fear factor coming into the markets. If we're seeing oil prices move higher, we know that their margins are doing well, and therefore they should be able to move higher. But we're starting to see things like some of these crude oil names start to roll over. As a matter of fact, if I'm going to be talking about that, let's talk about the equities real quick. Again, looking to build out the other shoulder on these head and shoulder patterns. We can see them showing up throughout here on these markets. So let's get over here to the markets here. I want to show a couple of XOP. We're starting to see a topping pattern there, get a little confirmed top based on higher prices in crude oil. These guys should still continuing. CB, ConocoPhillips, Chevron here, again, topping pattern confirmation yesterday. So this looks like it wants to start to roll over just a little bit. Market looks like it's willing to open unchanged here. And then you go to something like JP Morgan. These folks should be doing well on the fact that we're going to have higher interest rates. If you have higher interest rates, their margins are going to increase as well, because when they go loan you a house, when interest rates were basically pancaked, there wasn't a whole lot of wiggle room for them to make markets, if you will, for mortgages. Everybody was pretty tight. Now, as the interest rates increase, it gives them a little bit more wiggle room on their pricing for those different types of mortgages. So I would expect to see banks doing a little bit better. They're starting to roll over also. This is a real sign of fear, and the fact that gold's not moving higher here based on that CPI number. There's a lot of things out here that are causing these markets to start to roll over just a little bit. Yes, my son's walking in on my video and trying to get ready for work early this morning. So anyway, we're talking about higher prices there. That's probably an overarching theme here in the markets right now, is the fact that the fear of what's going to happen is overarching the levers and pulleys of what we would normally expect to see out of the investment professionals. It seems like I've been talking about this for a while now. It is a rush to raise cash. So be careful out there. I think it's time to sell calls as we're going to get this little bit of a rollover. I don't think we're going to snap back a V shape. There's nothing out there unless Biden came out and said, I'm opening up the oil fields. We're giving all these permits out that have been applied for. They haven't opened up a new or given out a new permit since he started. So that's part of this problem. Is the price of crude oil is just like what we've talked about with the equities and the multiples on those equities for their earnings. Crude oil is the same way, folks. It's looking at the demand and the supply and basing those future prices or the futures are basing it on a future expectation of price increase. Okay, so that isn't going to change right now unless the administration does a 180, and they're going to have to do it almost immediately in order for us to see any marketable change here in the economy going forward. And it really needs to happen right now. If it doesn't happen right now, the midterms might be the place where we see a major shift in the government because folks are going to just be fed up with prices. Pretty much in flux at this point. So beware, look for covered call opportunities right now. Volatility is still high. Market's going to roll over here. We might still see some volatility increase, but you'll get that directional move in your favor. You can also lower overall cost basis on all of your opportunities. Now, I was talking about looking for a time to start selling some puts in those markets where we were looking at the head and shoulders patterns. We see that other shoulder building out. That would be the opportunity to sell some puts. Right now is not the time in my eyes to start layering in some puts, to start getting long some stocks, because it feels like we're just starting to realize the type of pain that these markets are going to put on us. And we're going to have to be able to sustain that going forward. I don't think so. I think that this is going to be major pain in the market. So be careful, lower overall cost basis if you don't want to cover trades for capital gains or any of that stuff. All right. So that's all I got for you guys today. Hope you guys have a great weekend. And if you can't take that, take it easy.